Our next guest says he knows why the stimulus hasn't worked and why it won't work. Charles Ortel, managing director at Newport Value Partners, who correctly called the collapse of the credit markets. He joins us now with his point of view. Charles Ortel, good to have you with us on Bloomberg. You know, I'm wearing the hat and the Western shirt and the bolo for a reason. I want to get you in that spirit of Jackson Hole, Wyoming, right? Because tomorrow night at dinner, all of the experts, all of the economists, they get together, and I don't know, maybe they have, chicken fried steak, and they have Western garb. They all put on their Western garb. What are they going to be talking about at that dinner? What's the one pressing thing they've got to deal with?
I think they're going to, if they're going to speak openly amongst themselves, I think they're going to quietly be wondering, what they can possibly do to get the ship of state back on course, because all the traditional tools that have been used have not manifestly worked. You said earlier that our firm thinks we understand why this is the case. And really, if you go back to compare this situation to the Depression, the United States is in a very different position now than it was in 1933. In 1933, we were a new country. We were rising up to #1. We had a lot of infrastructure to build out inside the United States and in the Western world. Government workers were a very small share of the total as contrasted to manufacturing and retail and other vibrant parts of the U.S. economy. Their pay wasn't as high as it is now in comparison to the private sector. So we've gone through a long period where we've spent a tremendous amount of money. We've built out a lot of money. We've changed the way in which we pay for things. We borrow a lot more money. We have a lot more debt already.
So are you connecting the economy right now with things that grew out of the Depression? In other words, is the link that strong in terms of the big movement of the economy? So in a sense, this crisis would have happened whether we had the housing bust, or it would have been something else that caused the crisis?
I think this crisis has its roots in two important decisions. One, in about 1962, when John F. Kennedy encouraged the creation of public sector unions, and they became a lot more powerful and were able to get their pay and total compensation way up in relative to the private sector. And second, in 1989-91, when we won the Cold War. Because the unintended consequence of winning the Cold War was to open up a global labor market. Companies that have a tough job of coming up with new products and services were able to build earnings per share and cash flow per share a lot faster by replacing expensive workers in the United States and Europe. And that situation obtains today. There is a tremendous oversupply of labor on the global market, and it's accessible because of technology, and that's not going to change.
All right, but those two things that you cite, this idea of public sector labor unions as well as the end of the Cold War, at least at the time, they were sold to Americans and indeed sold to the world as pretty positive things, as things that were good for the country and good for the country's future. It's not turned out that way, at least according to your perspective, right?
Well, I think it could turn out for the better, but unfortunately, along the way, what we did at every stretch in America, at every stretch in households, banks, governments, corporations, we have been borrowing way too much money. We've become addicted to debt in this country, and because around the world, people look at the United States and say, things may be bad, but it's best in the United States, people are prepared to buy our debt. There's going to come a moment in time when the bond vigilantes do rise up and say, enough. We are not going to buy 10-year debt at 250. We're not going to buy 30-year debt.
Yeah, but would they buy 10-year debt at 350, at 450? I mean, because it can be, you describe it as almost it's going to go off a cliff, but couldn't it be more of a rolling kind of, hill? I mean, it doesn't have to be so precipitous. If you're going to have some kind of disagreement over the actual cost of money, well, what happens is you negotiate and the cost goes up or down.
Well, yes, over the last, let's say, since 1929 or so, it has been the case that we've been able to get together and make things work. But I believe that investors should factor in the possibility that these smart people gathered in Jackson Hole and around the world will not be able to fashion a solution in a short period of time.
All right. Well, we're going to have to see what happens on Saturday night with that special meeting of the executives and the economists, as well as Federal Reserve Chief Ben Bernanke. I want to thank Charles Ortel, Newport Value Partners.